Good morning, traders. It's 8 a.m. Chicago time on Friday, the 29th of July, 2016. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. As you know, the key news items overnight started out with the Bank of Japan stunning the market with a small tweak to their financial policy. The Bank of Japan said it would increase the amount of ETFs it buys to an annual pace of 6 trillion yen, up from the previous pace of 3.3 trillion yen. The Japanese yen stronger by 1.7%. We also got the Euro area GDP showing a slowdown of 0 to 0.3% in the second quarter, down from 0.6%. And then the S&P 500, according to some sources, did something it has not done since Richard Nixon was president. The S&P 500 ended Thursday's session inside a 1% trading range for the 11th straight session. It's quoted by an investment manager that this is the dullest market he's seen in decades. Other than that, we had a lot of earnings. Google beat. Amazon just absolutely obliterated its expectations. Microsoft is laying 2,850 employees. In addition to that, we got this morning the U.S. advanced Q2 advanced GDP annualized at 1.2%. The expectation was 2.5%. 1.2 versus 2.5 on GDP. And personal consumption came in at 4.2 versus 4.4. What does all of that mean, and why do we care? This is the stuff that's basically shaping what could be perceived by the OTF as actionable, potentially actionable information for the session. Overall, we're in the middle of earnings season. We got to pay attention to that. For example, ExxonMobil came in at 41 cents versus 64 cents because of the crush down prices of oil. Oil trading at $41 down this morning, down another 0.12 percent. And that's affecting many different industries. When you look across the board, you got to pay attention to what the earnings are doing. And right now, the market's in a holding pattern, in my opinion, and we're seeing the worst of it right now. As far as what we're expecting for today, as I said, we did get our GDP numbers. What's left is Chicago PMI. It's officially released at 8:45 Central, 9:45 Eastern. But just remember, this is a private number that is released to subscribers at about 8:42, 8:41, 8:42 a.m. Just 3 to 4 minutes ahead of time. In fact, the prop firm that I was with when I started trading futures had a subscription, and it could come in a fair amount early, and you really could back in the day you really could make a lot of money off of it because you're getting the number early. The expectation is 54.0. University of Michigan final expected at 9 o'clock, 10 Eastern. The expectation is 90.2. And then we get the Baker Hughes rig count, which really hasn't done much for us, at noon Central, 1 Eastern. This morning at 8:30, right at the open, 8:30 Central, we get Fed Speaker Williams. And then at noon Central, 1 Eastern, we get Fed Speaker Kaplan as well, so pay attention to that. That pretty much covers all the bases. There are plenty of news sources out there for you to look at, the various earnings outcomes and things like that. Let's take a quick look at the usual here. Review yesterday's anticipated action. Yesterday we opened in range. We expected to open in range and value. We expected it to be stuck in range and value, and we expected eventually that chop or that balance to break lower or higher. I couldn't tell which. There was really no edge, no clear edge on higher or lower. It turned out to be lower, and it did not balance at all. I did not have a hypo 2 because it would have been just whatever the opposite of hypo 1 is. With the same targets I've been telling you about all week. Target down is 21.49. Target up is 21.74 and a quarter. But it didn't do any of that yesterday. Essentially, it just traded sideways on the open. We did get the chop that was expected. Um, just a difficult open rejection reverse. There was some energy behind the down move down to 21.54, and then a push up to 62.75 that cancels this out. So the normal, not normal, but the most common expectation here on a drop like this is a drop, pullback. There's your mid test, and then a continuation of some sort. And I'm not counting on the continuation. Generally, we're just counting for it to retest this last low. Um, and we didn't get that. Instead, we get the drop, pop, and then push through. And so now we're looking for the pullback, chop, and then a retest of that high again. But given that this is a rudderless ship that we're trading in here, it basically took back the entire move. In other words, this move down was canceled by this move up, which was canceled by this move down. Then we get into this consolidation, this extended consolidation, which builds a beautiful high volume node. Kurtosis, lots of energy with the point of control down here, and then so the expectation was for okay, this is hanging in here. It's accepting this as value short term. The expectation is for it to ping pong and then potentially test lower and at least yield a test of 21.52, which was the excess low. Remember, I said that I would not be getting long anything below 21.55 and a quarter because the expectation is it would ride through into the excess low from the prior day, from the Fed day, which was 21.52. So here's the trade. The trade was mid-short, looking for the extension down, and it did not do anything. It gave a one scale out and then just started walking up, and we ended up with a neutral day. So it's a continued theme here that unfortunately we're in. The market has tended to buy everything below 21.55 or so and sell whatever's above 21.65, and that's the range we've been in for quite some time. So if we step back for a minute and look at a slightly bigger picture than that, then we would be seeing that from the 14th, this profile, let's send this profile to the back so you can see where it came from. So you can see here from the 14th, in fact, let's switch this to a streamer. So you can see this profile here started with the gap up on the 14th and pushing forward. It still has a composite low volume node right here at 21.64 and a quarter. And as I hold this profile down and shift it forward to include to yesterday's range, you can see how the volume is getting filled a little bit down below, but overall it is just trading right in the middle and filling things in. So you can see this low volume node getting filled in with this point of control that we put in yesterday. That's the point of control of yesterday. Lots of trading happened there, and the effect on this profile, as you see there, is that it starts to fill in that low volume node. See how it got full up right there, and it's almost disappeared. For that reason, this key MCLVN is going to disappear on your flex levels today right after the open. It's no longer relevant, and essentially what I'm doing is I'm watching the entire range and until it breaks out, it's really fading the extremes wherever you can find them. It is not a fun trade, but you know what? This is part of the cycle. We're in a low VIX, low volatility cycle, and you need to adjust for it. You need to be aware that the market is running through cycles, and some cycles are good for one type of trading, and some cycles are good for others, which means that for certain people, this is a drawdown period, and for others, this is a feasting period, and that's just the nature of the market. So just relax. If you're in the drawdown group, relax. Balance leads to imbalance in general. We are likely to break out of this area on further news. The other big thing I need you to remember is today is the last day of July. We have an end of month trade at the close today, so be cautious. You may see some adjusting at the end of the July. It's not a quarterly close or anything like that, but it is the last day of the month, and we tend to see some jockeying that occurs at the end of the day. A step back into a higher altitude here and a look at what's going on in the big picture real quick, since I have the time here. I have a couple minutes left. This is a monthly RTH session only, meaning day session only. This is an outstanding profile here. Look at this. Look at the kurtosis and the HVN on this. I sound like a total statistics and volume profiling nerd getting excited about this, but look at how compressed this market is up here. We have not seen this. I went back in time to look for a profile that has a P that's like this one. This is a P-shaped profile indicating short potential short covering, which we saw at the beginning of the month. But this is the last day of the month. This is how this profile is going to finish the month, and we have not seen anything like this in a long, long time. As I scroll through, most profiles have distributions that are either double, triple, or 4 or 5, or many, many distributions like you saw here in March, giving us a very, very a much more readable trade, as opposed to one where the move happens and it just stops right in its tracks and does not provide any other opportunity. And it hasn't done so for about 2 weeks, especially for swing traders, hedge funds, automated systems. Tough trade right now. So if your system's as I said, if your system's in a drawdown, this is generally a pretty bad time. A pretty bad time for performance, but pretty good time to see your system at its weakest, probably. Here's another one that was high kurtosis, but these are multiple distributions. November 2014. October was a very volatile month. September was a fairly quiet month, but we had a very wide balance market. Again, my point by showing you these monthly profiles, day session only profiles, is to say this is very unusual. So that comment by that hedge fund manager that we have not seen this tight a market since the Nixon years makes a lot of sense. I mean, this is really something to behold. We don't see this. We don't see a market that sits around and waits this long, essentially 3 weeks, for further pricing, further distribution of value. So this portends, what this means for us is that whatever move occurs out of here is likely to have a little bit of kick behind it. There's a lot of energy here that is likely to be dissipated if we move away from balance. We may see us move away from balance on the first day of the month, on Tuesday, on Monday. Generally, the bigger moves occur on Tuesdays in this product. So very interesting. Now let's get back to the ground and look at what we have today. Again, I'm going to sound like a broken record. Again, the overnight session, balanced. Yesterday's point of control was the same in the day session as the night session. Last night's session dropped the point of control slightly, but overall we didn't go anywhere despite the Japan news. We really didn't accomplish much. It looks like it tested. Here's the news here. It looks like it tested up and down, and that's pretty much the range on the Japan news. It tested the high and low, and we have been stuck in between. We are opening below the mid and right at the point of control on the overnight session. We're opening in a somewhat of an LVN zone on yesterday's day session. If all of these terms do not make sense to you, just hang in there. And look at the glossary on my website, futurestrader71.com/glossary. Over time, you'll start to understand the lingo and get what I'm telling you. But in general, what the overnight session is telling us is it's tested high, it's tested low, it is stuck in the middle with you. Right? And so this is not very useful information other than to say that we had pretty high volume on the overnight session. The S&P 500 is traded approximately 289,000 or so, something like that. Let's see what that value is. Looks like 269,000. 269,000 versus 200,000 in which is the normal or the most common volume on the overnight session. So there's a fair amount of activity there. But other than that, it's not giving us any hints as to what is likely to lead or who is likely to be in control on the open. So we're opening in between two distributions. Here's your top distribution. Here's your key LVN right here, right on top of the initial balance is our key LVN. So the first number I'm going to be watching on the upside is 2163, and then you have your second LVN right down here, which is the scene of the crime on the Fed day release, 2158.5. We're right in between those two. And what I'm looking for this morning is an open auction to test one or the other. And then I'm looking to go with whichever way it breaks. But I'm going to be tentative at any prices that are in the 2167 area and from below 2155 or so for it to continue to test. We test these prices and drop, test these prices and drop, test the low and push up, test the low and push up, and we've been doing this day after day after day for weeks. And so for me, I'm going to be looking to trade from the inside out. But I'm going to look to fade the outside in, meaning the edges in. If it happens to break out and finally get out of balance, I will not fight against this by continuing to go short. I will look for a pullback and look to join to recover from a loss in that situation. But in general, it's a tough call on these hypos now. But I do expect an open auction out of range. I expect that since the last two sessions have tested down pretty aggressively, I'm going to look for a test lower, the overnight low, and I'm going to look for a bounce to the overnight towards the overnight high, and I'm going to look for it to finish somewhere in the middle. That would be hypo 1. Hypo 2 is your guess is as good as mine. It's probably hypo 2 is going to likely be the reverse of this as we continue to trade in this balance and repeating the same stuff day in, day out. Nothing new here. Nothing new to see here, folks. So with that being said, don't forget the closing range trade today. The last half hour, the last 40 minutes may be more volatile than we've seen, given that it's the last day of the month. That's what we need to pay attention to. Good luck on this Friday. Remember not to burn a hole in your pocket before the weekend. Be conservative, as I've said. The theme this whole week has been be conservative, be picky, make them pry your stop out of your hands. But don't just step in there just for the heck of it or for the sake of trading. It is very tempting currently to just put on some trade, any trade, because it is just very dull. I find it hard. I find it hard for to I find it hard to find a lot of setups, and I've been trading for so long that I will not go back to inventing setups just because I'm bored. It's better to just focus on doing some homework, updating your journal, doing your numbers for the end of the month, or whatever. Keep yourself occupied. Good luck, and I'll catch you Monday. Take care.